All right. Happy Friday, you magnificent melonhead. My favorite part of the week, Friday afternoon live stream where I get to sit here and talk to you fine people for the last 45 minutes or so of trading, talk about what we saw this week, talk about what we might see next week and things going on, happenings around the world, especially in the world of finance. And today, it's all about Asia. Been talking a lot about the Fed lately. I've been talking a lot about inflation, right? You go back, you look at the history in the channel. I mean, Jerome Powell's in almost every thumbnail on my channel. Today, we're going to minimize the Fed speak just a little bit. I'm sure it's going to creep in. Sorry, I can't tell you what time it is without shaking my fist at the Fed. It's just how I roll. But we're going to talk about Asia. We're going to talk about China and Japan specifically today. Two different stories I see developing that could mean trouble for Western markets. All right? Maybe one, or maybe not. Maybe it is. Now, I have to warn you, anytime I mention China or the CCP, I can tell you the bot army comes out of the woodwork, and the censorship is very real, folks. So I have to ask you, please like this stream and subscribe to my channel, because I've seen this before. Every time I mention the CCP unfavorably, the videos get mass downvoted all of a sudden. It only happens on videos when I mention China unfavorably. And the next thing I know, the views on my channel, they just plummet. But I'm not going to self-censor. That's also why these streams are also going out to Twitter simultaneously. Hi, Twitter. Hi, tweeters. Twit people. Boy, that sounded condescending. Twit people. Let's not say that anymore. Twitter folks. Little blue birds. Hi, everybody. That's one of the reasons why I'm also going out to Twitter with all my live streams lately, because the censorship is really just getting tired and boring and frustrating. And, well, I'm not going to self-censor. I'm not going to not call out what I see happening at the CCP. It's bad enough I have to say the FEW backwards every time I talk about a certain globalist, elitist organization that wants to rule the world. It's bad enough I have to do that. That's enough self-censorship for me. But I'm not going to call out what I see going on in communist China. Definitely not. Sorry. Sorry, YouTube. Sorry, Algo. Sorry, bot army. It is what it is. So please, give me a like to offset that as we go. But the two big stories. There has been a prominent banker has just abruptly vanished in China. He has been disappeared. He's pulling a Jack Ma. Nobody knows where he went. His company confirmed today that they don't know where he is, that they've been trying to reach him and they can't get him. So, you know, anytime somebody in that country gets a little too popular or for whatever reason runs afoul of the CCP, they have a bad habit of disappearing, at least for a little while. And then when they come back, they don't really have a lot to say, or they usually admit they were wrong about something. Go figure. So that's happening. It's also happening right as the People's Bank of China, the PBOC, which is the central bank in China, they are pumping liquidity into their market. They're doing QE in China right now, right? Which, as the rest of the world tightens, except for Japan, they're doing QE in China. And there's also been some high-profile bankers and also high-profile Communist Party members who have been removed from their top banking posts in recent days. And look, early days of this channel, you know, in 2021 and earlier part of 2022, I talked an awful lot about the China Evergrande story and the collapse of real estate. I've done some talks at the Silver Symposium and at some of the events I did with Ninja all about the China's real estate collapse. And the story fell out of the headlines. It didn't get much coverage, really, for several months because the defaults and the collapses just, it seemed like the story was just put on ice. Well, it didn't go away. We had the bank runs in China last summer. We had the protests at the bank last summer. The story never went away. It's still there. The big pile of debt, the unfinished apartments, the bonds nobody wants, the apartments nobody wants. It's all still happening, and now we're seeing bankers disappearing. So it's a little suspicious that this happens right as the PBOC is pumping money into the Chinese banking system. They're trying to lower borrowing costs. Interbank lending is getting expensive in China, and that's usually one of the first indicators that something really bad is about to happen in the world of finance, when interbank lending spikes. We saw that in September of 2019. We saw that before the GFC. All right, so that's one story going on in Asia that I want to talk about today. The other story going on is this new guy, Mr. Ueda, who is taking over at the Bank of Japan. And that's a big story because the Bank of Japan is the other global central bank, and Japan's the third largest economy in the world. They're engaged in yield curve control, which is the most ultra-dovish monetary policy imaginable. And Hirohito Kuroda, the current head of the Bank of Japan, he's out in April. His term is up. And the BOJ surprised, it was last week when they announced that this guy Ueda, who is an academic, that he would be taking over. The person, I can't remember his name, and I'd butcher it even if I did have his name right in front of me. The person who everybody was expecting, who was kind of a hawk, he said he didn't want the job. And now all of a sudden this Ueda guy, who is kind of an academic, but he's an ultra hawk, he's saying, yeah, I'll take the job. And he's in April. Now they're expecting a reversal of this ultra-dovish yield curve control policy in Japan when that happens. We don't know how fast, how sudden, how severe it's going to be, but they are bracing for it in Japan. And a lot of that has to do with the Japanese government. The Japanese government has said they want to ramp up their defense spending big time. The war drums are beating around the world. World War III, we all see it coming. Japan is basically on the front line of that, and they are ramping up their defense spending big time. Well, they're going to need money to do that. They're going to need to borrow a lot of money. So Japan needs money to flow into its bond market. The People's Bank of Japan can't just print yen to finance this military expansion. So they need to attract the money back into Japan. The only way to do that is to let the rates rise. That increases the borrowing cost. That means yield curve control. It's out of here. So we're going to get higher bond yields in Japan. How fast? How much? Nobody knows. It's up to this Ueda guy who's taken over. Well, when that happens, it's going to upset the balance of things. There's a delicate balance in debt markets around the world. Japan is the third biggest economy in the world by GDP. And so what we think we're going to see is a lot of money leaving Europe, a lot of money leaving China, a lot of money leaving the States and going to Japan, where for the last couple of years, as Japan has had this ultra-dovish policy, the money has been leaving Japan and heading to these other debt markets. Well, that flow is going to reverse. Well, what are some of the effects of that going to be? Well, it's going to drive down the value of the dollar. We've seen what a rise in the Dixie, that can wreak havoc in markets. So it's going to drive the dollar lower. It could probably drive borrowing costs in the States higher as liquidity vanishes from the U.S. market and heads back over to Japan. So we could see an increase in borrowing costs here in the States, an increase in interest rates here in the States. What's that going to do to gold? A weaker dollar should be bullish for gold, but higher interest rates bearish for gold. So what's happening in Japan will absolutely affect our markets, just as what's happening in China could be an indicator of a financial crisis brewing in China, and that will absolutely affect us here in the market. So that's the quick 1,000-foot summary of what I see happening in Asia right now. And both of these stories, they will make their way into headlines, I think, in the near future. Just remember, folks, you heard it here first. And I think it's about time. We're going to shrink my melon of a head. We're going to say hi to my man Mish here as we take a trip through the indexes. What's going on, Mish?
Not much, man. I was listening to that BOJ stuff. Yeah, man. That Bank of Japan is really what I think is a big question mark right now. We got 2 months to figure it out, but he could.
Yeah, you know, we've seen. We definitely saw a big move in the dollar and the yen, right? There's been a lot of happenings at the BOJ when they raised their target from 25 basis points to 50 basis points. That made a mess in the DXY and in the stock market. So it's absolutely going to affect us. Now, is it going to affect us a little? Is it going to affect us a lot? Yeah, it really depends on this Ueda guy and how far he goes with his hawkish behavior. I'm going to say hi real quick before I forget him. I got my man Mike Binders here. What's going on, Mike? Thank you for the super chat, sir. You are a gentleman and a scholar. He says the money devalues faster than PE ratios reflect. Absolutely. It absolutely does. And, you know, China better be careful. You know, we're going to show a story in a little bit about the PBOJ, not the the PB. I almost said PB&J. I'm making myself hungry now. By the way, speaking of PB&J, hi, Mom. Hi, Dad. I love you guys. They always used to make me peanut butter and jelly for lunch when I was a kid. Still love it to this day. That stuff is delicious. But what's going on at the PBOC, the People's Bank of China, you know, they're printing, they're easing, they're injecting capital at a time when inflation is already hot. And now China has had a real problem with capital flight in the last couple of years. And if they're going to start easing, they better be careful. They might be chasing that capital right out of their own country. Now, the typical CCP response is always to crack down on capital flight, to ban it, to make it illegal. But money will find a way to get out of there if it wants to. So that's something they got to walk a tightrope over at the People's Bank of China as they are easing monetary policy. Thanks again, Mike, for the super chat. Sir, you are a gentleman and a scholar. All right, let's see what's going on in markets right now. We got about 35 minutes of trading left in the day. S&P is still in the red, but barely, down 15 points, or about a little more than a third of 1% at the moment. Taking a look at the S&P chart, looks like we had a little bit of a breakdown from this 2023 trend this week. There we go. It happened last night. Now, we caught a little bit of a bounce today. There's a big wick at the bottom of that candle. But the S&P is, it's lost its ascending level of support that it's managed to hold since the start of this year. And also looking at the S&P, this is now the RSI, or the Relative Strength Index. It's a measure of the momentum of the move, and it confirms that breakdown. We also had a breakdown in the RSI, now 2 consecutive lower lows there. So it looks like this move may have some legs, but what about the MACD? What is the MACD telling us? Yep, I see the MACD rolling over also. A bearish MACD crossover. So the technicals on the S&P not looking all that good right now, although I do have to say this late day comeback, the fact that that's kind of looking like a hammer pattern there right now, if this manages to close in the green, I might ease off on some of my bearish sentiment. Emphasis on some. I remain, as always, the perma bear. All right, let's see what's going on in the Dow. The Dow, look at that, in positive territory, up 88 points right now. We're about 0.25%, faring much better than its tech-heavy cousin, the NASDAQ. Let's look at the NASDAQ chart right now, down 83, leading the way lower today, or about 0.7%. Now, that's a heck of a lot better. It was down well over 100 points at one point today, so all things considered, I think the NASDAQ, you're probably getting off cheap today. By the way, congratulations to somebody. I cannot remember the name. I apologize, but somebody mentioned it in the chat in the live stream this morning that they had taken out a position in SQQQ yesterday. Well, they're probably sitting pretty on that position right now. So whoever that was, I'm sorry for forgetting your name. Nicely done on that trade. Looking at the NASDAQ, I want to look at the same technicals, and we're looking at a pretty similar pattern to what we saw in the S&P, where we've had this trend of support since really the start of the year. Well, we have broken down below that now. Same thing, we have 2 consecutive lows now in the RSI, which is measuring our momentum, and we get the same thing on the MACD, a bearish cross on the MACD. This chart is rolling over. So the technicals in the NASDAQ also not looking that good. All right, let's move over to the DXY, and boy, the dollar made a pretty sharp reversal today, didn't it? This morning, we were up around 104, almost 104.6 at one point. And then 8 a.m. this morning, the dollar just abruptly reversed. It bounced around a little bit, but it was falling all day. Now dead even as we speak at 103.86. So is the dollar topping out right now? Is that it? Let's take a look at the dollar chart a little bit more long term. You guys tell me. Well, that does kind of look like a topping candle there, doesn't it? Going to wait for a few more data points before I make the call on that one or not. But we definitely...
Zoom in a little more.
Zooming in a little more.
Yeah, is that a doji star?
What, back here, this one there?
Yeah.
Yeah, I would call that an inverted hammer, I think, more so than a doji. I think they're probably one and the same, probably just a different nuance. Where was I? Oh, the 50-day moving average. That's the one I was watching. Look for that to act as support. We have come up above it. It was resistance. We broke above. Now we're up here. Looks like we're rejecting this level up here. Are we going to come down next week and retest that 50-day moving average again? Maybe, maybe not. Again, the dollar, it's important to watch. Dollar goes up, stocks go down. Dollar go down, stocks go up. So that is the denominator in the pricing equation. Got to keep an eye on that one. Now, the bond index, when we started this morning, bond yields were up across the board. No longer the case. We got the bonds are up in the short end of the curve. Bonds down in the long end of the curve. That is further inversion of the yield curve happening. That is risk piling up in the debt market. Got the 10-year Treasury is at 3.82 right now, down a little over 2 basis points. Let's take a look at the 10-year Treasury, what it's done this week. Well, we rejected that previous high. We were above it this morning when I was doing the live stream at the opening bell, but we have rejected that level. Again, don't know if that's a rejection of this current trend or if it's just a pause on the way higher. So we'll see what happens next week with that one. But really, since the FOMC meeting, last week. Was it last week? It was about 2 weeks ago now. Man, the days are just blurring together, flying by. Time flies when you're doing this, folks. But clearly an uptrend in the 10-year yield along with the Dixie. We'll see. Did we get a reversal today? I don't know. Looking over at the commodities board, gold down just a nickel, 1851.65, pretty much flat for the day. Silver actually managed to eke out a gain today. Congratulations, Silver Bugs, at 21.77, up 6.3 cents or 0.29%. Oil still looking pretty nasty today, down 2.16 or 2.75%. A lot better than this morning. We were down almost $3 at one point this morning. Oil is really, that's the big macro indicator right now that I'm looking at is oil. The prices are low. The inventory is building. We shouldn't be seeing that with the SPR dumping at an end. We should be seeing inventory being drawn down in oil. And that's just really worrying me about the macro. These manufacturing numbers are so bad. These oil consumption numbers are so bad. All these muckety mucks are on CNBC talking about the health of the consumer and the strength of the jobs market and the no landing. Gag me with that garbage. If the consumer was so strong and if the jobs market was so tight, how come nobody's using any energy? You cannot fake energy consumption, folks. You can't. And, well, the oil charts don't lie. 76.35 for WTI crude, down another $2 today. And natural gas still heading lower. That natural gas a little bit more function of the weather than oil is. But still, 228, down another 10 cents or 4.23 for natural gas. The energy markets just aren't there. The energy markets are not saying the economy is booming. I can tell you that. Big breakdown in oil today. Although right now, it's probably not going to retake. Go ahead, Mish.
Yeah, the actual phrase was "gag me with a spoon."
Gag me with a spoon. Yeah. Either way, gag me. That I saw one. I can't remember her name, but it was one of the regulars on CNBC today talking about how wages are up and the consumer is so strong. And I feel bad for Gigi. I mean, Gigi's office isn't too far from mine. She works from home too, and I'm down here shouting at my screen, and she's trying to be on a conference call as I'm shouting on my screen. Poor girl. Talking about how strong the consumer is and that wages are up. And if we could just get inflation under control, the wages will be higher. The consumer will be so strong. Almost all of that big increase in retail sales that we saw in January, that $20 billion, like $16 billion of it was credit expansion. It's all on the credit card. That's inflationary. That doesn't mean inflation is coming down. That means inflation is about to get worse. Debt, credit expansion, debt creation, that's money creation. That is inflationary. We're seeing the beginnings of a second wave of inflation here. That's not good for the consumer. That means the prices are going to rise and the consumer is going to go even further into debt. And what's the Fed going to do when the consumer goes further into debt? The Fed's going to raise the interest rates on that debt, and the consumer's going to have even more money to shell out now for interest payments on that credit card bill. The American consumer's on life support, folks. Yeah, sure, the retail sales numbers look great, but where did the money come from? It didn't come from wages. It was debt creation. And these people on CNBC are not stupid. They know better than what they're saying. They're on the TV shopping their book. That's what they're doing. They're advertising the other side of the trades they're taking. And that's, man, I tell you, when I switched off that network, I got so much better at this when I stopped listening to what was being said on CNBC. All right, I see a couple more people came in on the SCs. Let me find them. We got Mike there. Who was after Mike? Man, you guys are going to town on the chats. It's hard to keep up with it.
Timber Frame.
All right, Timber Frame. Thank you, Timber Frame. That's a new name. I like that one. He says, thank you for not pumping and dumping penny stocks to us or trying to sell us education courses that are 80% off for one day only every day. A+ for integrity. Please keep it up. All right, I can tell you guys one thing. I will never pump a stock for money on this channel. Not ever. All right, I have turned down a lot of money. It has been offered to me, and I've refused it every time. All right. I will from time to time talk about stocks, and I will disclose if I have a position in that stock or not, or some related position. All right. So I will be transparent about how I make my money. I will not pump stocks for money. It's just a thing. There are other people who do it, right? I don't judge them for doing it. I talk about stocks a lot more than some of those other channels. So I stay clear of that. I'm not judging the guys who do. I don't do it personally. All right. And pumping and dumping, yeah, absolutely not. Education courses, I'll be honest with you. I've seen some of the courses, and I'll tell you, my wife got me for birthday. Hi, Gigi, by the way. I love you, honey. She bought me a speed reading course. I don't know what she paid for it. I guess I should know, but I want to do more reading. I read a lot of articles and a lot of charts, and I figured if I could increase the download speed of my brain, it would make me better at what I'm doing. So for my birthday, she got me a speed reading course, and I'm looking forward to that. And to be honest with you, I think you can actually get a better education, better information from some of these online courses for a whole heck of a lot less money than a formal education. I mean, my God, what does college cost right now? $50,000 a year. Some of these places was 67. Who knows? I mean, I've been out of college for a while now. Um, and, Joe Brown made a really good point at Heresy Financial. He did a video a couple of days ago. It was a short. And he said, you can audit virtually any college course in the country for free at any time. You can just walk in and listen to the lecture, and there's nothing stopping you from doing the work. Why do they give that away? Why? Because the value in the college education is not the content that is taught. The value is in the piece of paper that is attached. And you can't get a free audit and walk away with the piece of paper with the degree. So I'm not going to badmouth guys who sell courses either. I don't sell any courses right now. That may or may not happen in the future. I have no plans on selling a course. Again, don't knock the guys who do it. Some of the courses I've seen are really, really good. I'm really looking forward to this speed reading course. And, hey, man, everything costs money. It's a lot of work to create a course. And, people deserve to be paid for their time. So that's all I'll leave that. But Timber Frame, thank you very much, sir. And I appreciate the kind words. Integrity is expensive. Let's just put it that way. And not everybody has it. And it's real easy to sell it. We are resisting that here. I've been very lucky and very blessed that I've never been placed in a position where I'm really forced to consider it. So let's just put it that way. Thank you very much, sir. And I will keep it up.
Hey,
and
so
Mr. Dan,
actually, back in the seventh grade, I got a teacher. No, that's fine. I had a teacher that taught everybody speed reading. And I'm still friends with probably half the class. We still use it to this day.
Yeah. I tell you, I would love to do it. I've seen some guys who can just like take their hand and just scroll down the page and just get a whole page in like 10, 12 seconds. It's amazing. I don't know if I'll ever get that fast. But if I could speed it up, I would really like to. I have a long, long list of books I got to read, recommended reading from you melon heads. And I'm never going to get through it if I don't increase the download speed. So spend all day reading articles and looking at charts. I need to spend more time reading books, and I need to be efficient with the time I spend doing it. And I want to say thank you to Dan Hedin also, who says the Magic Oil Fairy is filling it. Just ask Joe. Come on, man. Come on, man. The Magic Oil Fairy. Now, I don't know that they're filling it. All I can tell you is the oil numbers just don't jive with the story that's being spun. If the economy was healthy, economic activity requires energy. And if the energy is piling up, if the energy is not getting used, that means the economic activity is not happening, right? Because contrary to what you might hear at some drum circle in a liberal arts college, you can't have an economy without energy. It doesn't work that way. Or you can, but the economy you get without energy is probably not the economy anybody wants. Certainly, I don't want it. So the Magic Oil Fairy filling it, I think the Magic Oil Fairy is not burning it. That's the problem. I mean, our production, it's up modestly, but not that much. Our consumption is dropping. This is demand destruction happening in oil. It tells me the recession is already here. And, we're seeing it with the layoffs. So what are you going to believe? You see oil piling up in storage. You're seeing story after story about layoffs. And then you're hearing the economy is strong as all get out and the jobs market is super tight. Well, believe who you want, guys. It's a lot harder to fake the data. That's the only thing I'm saying. Some of the data can be, you can make the statistics lie, but how much oil is in the tank, that's hard to fake. Let's just put it that way. Thank you, Dan Hedin, and thank you, Timber Frame, both of you guys, for the support of the channel. You wonderful melon heads. And EC660 is back. He says, just paying my entry fee. Appreciate what you do. Well, thank you very much, EC660, for paying your imaginary entry fee. It's actually free of US dollars. It costs you 100 million melon coin to attend my live stream. So please submit your payment promptly in melon coin. The printing press go burr over at the Melon Fed. Thank you very much, EC. I appreciate it. And yes, this one is live. You did catch us live, EC660. All right. Let's move on now. We're talking about oil, talking about natural gas. Still didn't do the natural gas trade. We got close. I'm going by the underlying commodity, not by the ETF for my signal to buy natural gas. It got really close a few days ago. That's all I'll tell you. It got really close. Where were we back here? This was Tuesday night. I wanted to see the one full green candle above the 9-day moving average, and the bottom of that candle was just below the 9-day, so I held off. I really wanted to pull the trigger. I have really wanted to make the natural gas trade for a while now, and I haven't let myself. I said I'm going to hold out for this full green candle above the 9-day. We haven't gotten it yet, and I guess it's better that I didn't. Natural gas currently sitting at 234. What are we down? Another 5% today, so another tough day for the natural gas commodities. Again, you cannot fake energy consumption, folks. Warrior Lady. Wow. Shield Maiden. Thank you, Warrior Lady, for the super chat. I got great names in the chats today. That natural gas chart doesn't look clean to me. It looks a lot like manipulation happening. I'm not sure I see manipulation. I see a winter that never really showed up. I mean, my snowblower, thank God, hasn't been needed because it's buried under chicken coop crap in my garage right now. I have so much stuff in my garage. You end up buying a lot of stuff when you get chicken, like trash cans full of feed and tools and stuff like that. So I haven't had to use my snowblower at all this year. I know Mish got a lot of snow in Nebraska this week. I think it's probably heading here, which means I'm probably going to be cussing up a storm this weekend trying to dig out my snowblower in the garage, and hijinks and hilarity ensues from that every time. But we just haven't really had that bad of a winter here. We haven't really had that bad of a winter over in Europe. And so the demand has been lower. Mother Nature bailed out the energy markets. Now, could there be manipulation going on in commodities markets? 100%, absolutely. We know it happens in precious metals. Energy markets, energy commodities, most of that trade is physical delivery, where most of the people buying and trading in the futures end up taking delivery of it. So it's a little harder to manipulate some of those more liquid commodities, whereas like the silver and the gold commodities, it's almost all on paper. There's very little movement of the physical metal, so it's a little easier to hide what you're doing over in those markets. So I'm not sure this big collapse in natural gas is really price manipulation as much as it's just the weather, and that's natural gas is the widowmaker trade. Go ahead.
Well, yeah, it is a widowmaker trade, but I think it's important to note that there's been a stratospheric warming in the polar vortex, which is causing the polar vortex to collapse. And the United States and Europe will see much colder weather starting next week. Brian Hall.
Brian Hall. Mish sends me weather updates rather regularly from this guy. They are pretty good. And, those polar vortexes are no joke. You get a chunk of that polar air breaks off and makes its way, dips down south. It gets nasty cold here. We all lived through it for a couple of days on Christmas Eve. I remember going out to take care of my birds on Christmas Eve. Oh, my God, did my hands hurt when I was done doing that. That was brutal. My poor birdies, my poor birds. But they kept laying eggs the whole time. God bless them. By the way, I got 15 eggs again today. My birds' production is up. They stopped eating their eggs. Thank you very much, Warrior Lady, for the super chat and the support of the channel. Appreciate that very much. And somebody else just came in. Who is it? Peter Frauen. What's going on, Peter? He says, Jack, what crashes first, stock market or banks? Define crash, Peter, because stocks were down about 20% last year. That's at one point. So a lot of folks would call that a crash. I don't know if I would call that crash as much as bear market. I'm going to say they kind of happen simultaneously. The big one hits during the credit event. I would say, so for that, the credit event is the initiating event that causes the stock market sell-off. So then I will say banks will crash first based on that information. We will see some kind of a spike or some kind of a freezing in debt markets where the banks will all of a sudden all go on defense all at the same time. Nobody will want to lend to one another. And the only person doing any lending will be the Fed. That will be the signal that something bad is about to happen. Now, that also means that the Fed is the liquidity at that point. And that's when we probably go like QE infinity, QE forever, modern monetary theory, on, money printing endlessly. So, I'm going to stop short of trying to predict what that looks like. just to know it's probably not going to be good for you or I when that happens. But I'm going to go ahead and say the trouble shows in the banks first, kind of like we're seeing in China. We'll talk about those stories in a little bit, where the interbank lending in China starts to dry up and the PBOC is forced to step in and start injecting liquidity. So that doesn't mean stocks can't go up or down between now and then, but that's kind of how I see it, Peter. And thank you very much, sir, for the super chat and the support of the channel. As always, Mike Binder is back. Says, not agreeing on the mild winter now to gas savings. Okay. Well, you're closer to that European winter than I am, that's for sure. German chemical industry shut down by approximately 50%. That is absolutely a contributor. Absolutely, Mike. Product output dropped 30% month over month in January. So that's a great point. They did shut down a lot of industry. They started saving energy, anticipating that cold winter that never arrived. So that is a good point, Mike. It's very possible that the shutdown of the chemical industries in Germany, in the European economy, has contributed every bit as much as the mild winter. And yeah, I will give you 100 million melon token for your insight and boots on the ground information. And by the way, congratulations, Mike. I'm glad things worked out for you guys. Back in the fall, it was getting a little scary about what might be happening over in Europe this winter, and I'm really glad that has worked out so far. We got a couple of months left to get through, so let's not count those chickens just yet. But I am glad that has worked out. Troy Rhodes said, "What's that now?"
Speaking of chickens, I'm gonna field this one.
Go ahead.
So Troy Rhodes asks, how did you get your chickens to stop eating eggs? There's two different ways you can do it. One is you should be using your old shells and grind them up. You bake them for like an hour at 200 degrees, and then you grind them up, put it in their feed, right? And that helps a lot. But you also can get these cakes. They're about, I don't know, $20 on Amazon, and it's for chickens. So they sit there and peck at it, and it has all the minerals they need. And we found that our egg eaters went down from like half the flock to like one guy that, as in M&J says, he got to go to freezer camp.
Freezer camp. Nice. Send him to live on a farm. Yeah, I
did
take your advice. I took your advice on the extra calcium, Mish. I usually did recycle my eggshells, but I put about half of the eggshells I recycled into my soil as an additive to try to get healthier tomatoes next year. But after having this conversation with Mish, I put a lot of golf balls in the nesting boxes because they go in there thinking it's an egg and they peck at it and it hurts. So they learn to stop pecking. I put a lot more of the eggshell powder into their feed. So I gave them extra calcium. There were a couple of days, it happened the worst on the cold days. And I think it's because their water was freezing. So I started doing more frequent water changes. That helped. I started gathering the eggs right after my live streams in the morning. So I go out and get the eggs before they had a chance to eat them. And I also stopped putting so much corn and sunflower seeds into their feed mix. I give them mostly just the laying pellets now. And then the corn and the sunflower seeds, I sprinkle into the run so they can hunt and peck for those, keep their brains active. Which of those things had the biggest effect on them? I don't know. I tried everything. At one point, I was down to getting 3 or 4 eggs a day that I was able to save. They were just devouring all of them. Now, today, I got 15 eggs. So that means I only have 15 hens. So they all laid them, and none of them ate them today. So we have solved the great dilemma of the egg eater, thank God, because that was bugging me because I don't know that I could send my birds to freezer camp because my daughters are very, very much attached to my birds. As soon as they got names, that freezer camp kind of wasn't an option. Thank you, Troy Rhodes, for the interest in the chickens. Thank you, Mish, for your excellent advice on breaking the egg eater habits. And thank you, Vacation Time 247. What do you see as a catalyst to turn this current bull run around and continue the bearish downtrend? Well, lately it's been the Fed. It was the combined data points of the FOMC, the CPI coming in hotter than expected, and then those retail sales numbers. Those three, it took a while for that to really set in with markets. But I think once the markets had time to digest that, they realized the higher for longer Fed was going to be a thing. And so the euphoria kind of died down. The dip buyers disappeared eventually. It happens in the bond market first. The stocks are always the last to show it. So, I mean, you kind of saw it. I made a few videos and I talked about it on my live streams the last couple of days saying like, hey, the whole market is fighting the Fed. You don't do that. That's not That's not a good place to be. If you find yourself on the other side of the trade as the Federal Reserve, you're doing it wrong because they can make their own money. They control the value and quantity of money. You're not going to win against that. So don't fight the Fed. That's why they say that. Now, what could be the catalyst that could turn this bull run around? Honestly, I think it's already happened. I think that was the catalyst. Watch the dollar. Watch what's happening in these overseas banks. We're going to get to that. I know we've been going for a while and we haven't gotten to the China story yet. But that could be something, a sudden surge in the strength of the dollar would be catastrophic for stocks. At the same time, a sudden collapse in the value of the dollar could be very buoyant for stock values. That could send markets higher. So you really got to watch these overseas central bankers over these next few months, especially the Bank of Japan. Keep an eye on that one. Thank you very much, Vacation Time, for the thoughtful question. And you guys are hard to keep up with today, and I'm finally caught up. All right. Let's move on from the natty gas trade. Let's start talking about China. So this is the first one that I saw. Star banker's disappearance unnerves China's business elite. The guy's name is Bao Fan. I apologize. Guys, I butcher names. I don't get out much. Sorry. Feel free to make fun of me and my gringo accent. But he is said to be assisting an investigation. That's interesting. He's assisting an investigation. When you disappear to assist an investigation, some might say you were taken into custody. Some might say you were captured. Some might say you've been imprisoned. No, they just say, we can't find him, but he's assisting with an investigation. Well, what? Did the guy suddenly become a cop? Is that what he did? Was he deputized? Did he put his hand on the Bible or whatever they do in China when they're deputized, and now he assists with the investigation? Deputy Bao Fan? No, they disappeared him. Chinese investment bankers firm says he cannot be contacted. Bao Fan's knack for closing complicated deals and spotting rising tech stars made him one of China's most influential financiers, which is not somewhere you want to be. You do not want to be a popular person in Xi Jinping's China. Ask Jack Ma. I don't think it ended well for him. His sudden disappearance this week, linked to a Chinese government investigation, is now sending chills through the company's business elite and raising a fresh doubts about whether President Xi Jinping's crackdown on the private sector has run its course. While there's no indication that China Renaissance Holdings chairman has become a target of regulators, the investment bank said late Thursday it had lost contact with Bao, and the banker's family was told he's assisting an investigation, a person familiar with the matter said. Kong Lin, the firm's former president, has been involved in a probe by authorities since September, the person said, asking not to be named in the discussion while discussing private information. And there is Mr. Fan right now. You may recognize him. He's the guy from the thumbnail. So without any comments from the authorities, we don't know, right? It's hard to get information out of China. All we know is this very popular banker has disappeared. That's all we know. Nobody knows where he is. Nobody can get into contact with him, and he is supposedly assisting with an investigation. All right? Let's not draw too many conclusions from that, but let's move on to some other recent stories we've seen going on in China. And this is in Bloomberg. This is dated today. China removes PICC and Bank of China chairman from party roles. Uh-oh. That's two bankers being removed from Communist Party authority positions. Well, what's going on there? Luo was criticized for his personality cult in an online uproar, and Bank of China chairman Lu Lang, also removed as party chief. What's going on with these bankers? China has removed the Communist Party chiefs from two of its biggest state-owned financial firms, sparking concerns of a renewed clampdown on the sector. Luo Ji will no longer serve as party secretary of the People's Insurance Company Group of China. The nation's largest property insurer said in a statement on its WeChat account Friday without providing a reason. The announcement came days after online criticism that Luo, who remains chairman of the firm, was building a personality cult when the company demanded employees recite his golden quotes. Again, you don't want to be known as a personality cult in Xi Jinping's China. Just ask Jack Ma. Just ask Bao Fan. Not somewhere you want to be. Separately, Bank of China said that the ruling party has removed their chairman, Lu Lang, as party chief without providing a reason. The announcements come amid signs that President Xi Jinping's anti-corruption campaign is escalating in the finance industry. News about the disappearance of high-profile banker Bao Fan dominated conversations among bankers and tech executives in the absence of any official comments on Friday. So it's not just Baofan disappearing. Now we've got two prominent bankers being removed from positions of authority within the Chinese Communist Party. What is going on in China's banks right now? Is this just more of this anti-corruption crackdown? Which, by the way, whenever governments have anti-corruption crackdowns or anti-corruption campaigns, they're usually the most corrupt campaigns imaginable, right? Just like when you call it the People's Republic of, it's pretty much the opposite of a People's Republic. So when you hear an anti-corruption campaign, just know that kind of makes the hair on the back of my neck stick up a little bit. All right, so let's move on from that story. Again, I don't want to draw too many conclusions here, but all of these stories in aggregate paint a worrying picture. This one, yesterday, China ramps up economic support with biggest ever cash injection. The PBOC adds a net 632 billion yuan with reverse repos. Beijing is determined to keep the cash supply ample. And I love how they just say analyst. Well, thanks, analyst. How are things at the analyst household? Say hi to Mrs. Analyst for me. I hate anonymously sourced articles. Please source your freaking news, everybody. I get it's China. Nobody wants to put their name on the line.
I was going to say, if you attribute to someone in China to say something, they're probably going to get disappeared.
I know. And, I hope Mr. Analyst is safe and well and that he doesn't end up sharing a cell with Baofan. You can't have the fans and the analyst family wondering where everybody is. But it's a pet peeve of mine. And, I'm trying to be responsible with what I say on the internet, what I put out. I want to put out accurate information. But if I'm talking about a story that is sourced on anonymous or shaky ground, then any commentary I'm providing is equally shaky. So that's why I see the trend increasing. More and more people are using anonymous sources, and all right, I'm getting sidetracked here. Let's move on, shall we, from the anonymous sources. China ramped up its support for a nascent economic recovery, seeking to nip a squeeze in bank borrowing costs in the bud. This is a really hard sentence to read. Let me start over. Seeking to nip a squeeze in bank borrowing costs in the bud by injecting a record amount of cash into its financial system. So forget all of Jack butchering the sentence and everything and my lack of eloquence. We've got a squeeze in bank borrowing costs and the need for the central bank to inject a record amount of cash in the financial system. Well, that's worrying. That's happening the day before or the same day that Baofan goes missing and the two guys get removed from their Communist Party posts, the two bankers, right as the central bank starts pouring money into the system because borrowing costs are going up. What's happening in the banking system in China? The People's Bank of China offered the short-term cash boost to lenders on Friday, having just pumped 1 year money into the system earlier this week. The operations came after a gauge of interbank funding costs soared to the highest in 2 years last week and stayed elevated since. And who was it that asked me what will go first? Would it be the banks or the stocks? Remember I mentioned the surge in interbank lending? That's usually what precedes some kind of a credit event, and then that's usually what sends stocks crashing. Well, that is exactly what we're seeing right here. We had a interbank funding costs soared to the highest in 2 years last week and stayed elevated since. That is a spike in borrowing costs. And so the central bank is increasing the supply of money to try to lower the price of money, which is interest rates. Supporting growth became China's top priority after policymakers abruptly dismantled COVID restrictions late last year as sporadic lockdowns and a property slump sank the economy. But as the end of the COVID zero lifts consumption and demand for loans, oh my God, I'm getting my channel in so much trouble with these words, it also created a liquidity shortage that could hinder a sustained recovery. Liquidity shortage, that sounds dangerous. If you ever hear words like that used to describe the U.S. banking system, that's not a good sign. Liquidity shortage, you don't want to be there. That's putting the PBOC in a bind. While it has to ease policy to replenish cash in the banking system, it cannot do it in an aggressive manner that places China too far apart from hawkish global peers. A major policy divergence could weaken the yuan and reignite foreign capital outflows, which were the worst ever in the bond market last year. So that's the conundrum of the PBOC. That is the problem that 6 one, half dozen the other. Do they let borrowing costs soar and risk a credit event in their banking system? Or do they inject capital and cause capital flight from China as all the foreign investors pull their money out of the country because they're devaluing the currency? So, again, all of these things in aggregate, what is going on in the banking system? And I just want to remind you guys about this one. This is in South China Morning Post yesterday. China's property sales will continue to fall this year, adding to debt pressures on local governments and weaker banks, according to Moody's. The Evergrande collapse, the housing collapse in China, it never ended. All right. It didn't spread. It didn't get worse. We did have the bank run story over the summer, but it never went away. That problem was never solved. It's still there. Now we have bankers disappearing, bankers getting fired from the Communist Party, PBOC cash injections. Something's going on in China right now. The International Credit Rating Agency said mainland property sector will remain soft this year with negative effects on local government finances. Moody's says China will experience a difficult transition as the property sector is unlikely to regain its role as a major growth driver.
Well, remember that there were 1 million households not paying loans when we dropped that story sometime in July, August. That's not gotten better either.
That really fizzled out. The mortgage boycott. Whatever happened to that story?
It's still going on. We just don't get any news about it.
Wow. I'm going to maybe some weekend reading material there. What happened to the China mortgage boycott story? All right. Any of you guys are following me on Twitter, send me a DM if you got any links or any information on what happened with that mortgage boycott story. Maybe there's a Reddit group that's tracking it out there somewhere, because I haven't heard anything about that since the summer. And by the way, that is the story that got me landed in a semi-permanent shadow ban. And this is why I ask you guys to please like this live stream, share it, subscribe to the channel, hit the notification bell, all that stuff, because I had a video that I can't believe I forgot about this. I had a video got demonetized when it was showing the protests at the bank over in China last summer. And it happened in November, right after the FTX video I did blew up. The video got demonetized because it showed plainclothes Chinese police officers kicking a bank protester in the back. And they said it showed graphic violence, and that's why the video was demonetized. And ever since that day, the views in my channel have been cut in half. I lost half of my channel's views, which hits you right in the wallet when they do that, because I showed a picture of a Chinese Communist Party operative dressed like he's going to gym class, kicking a guy in the back as he was being dragged away by police. And that was the high crime that I committed, that I got punished by the algo for it. So since that day, Mish will tell you, Mish is looking at my channel's numbers all the time. Johnny 5 likes his data. That has killed the growth of my channel. Absolutely killed it. And I watched Chris Taylor from Financial Pepper just sail away with the lead ever since then. I love you, Chris. Chris is awesome, by the way. Chris and Stacy are great people. I love Financial Prepper, but it's not even a contest anymore. He is blowing me out of the water. Ever since I got hit for that China video with the protester getting kicked, they have just absolutely, he's just killed me. He's demolished me. So well done, Chris. Keep up the good work, brother. All right, let's look at the, real quick, this is the Chinese yuan as measured against the dollar, or I should say this is the dollar measured against the yuan. You're going to see this chart a lot. The dollar was peaking all last year, heading up. Then right around November is when it hit its peak. We had this contraction in the dollar, and now all of a sudden we have the dollar rallying again. So this is kind of what the Chinese need to keep an eye on. Back in November, this is when the PBOC started defending their currency. And that happened right around the same time the Bank of Japan started defending the yen. They started dumping their dollars in order to buy their own currency to try to offset the easing that they were doing in their own markets. So that caused this big pullback in the DXY. Well, these last couple of days, ever since Jerome Powell's meeting, we have had this rally in the DXY. Ever since Powell's hawkish meeting in early February, and then the CPI print, and then the retail sales numbers in the David Rubenstein interview, we've had the dollar has rallied. Now, I think The PBOC is probably still dumping dollars to defend their currency. I think the BOJ is probably still dumping dollars to defend their currency. We haven't heard a lot in the press about that. So, again, this all will spill over into our markets. If China has to print too many yen or too many yuan and they devalue it too much, that will have knock-on effects. It will strengthen the dollar. Even though the yuan is not a direct input to the Dixie, it will cause the dollar to strengthen in the foreign exchange market, which will drive the Dixie higher. That would drive stocks lower. So you need to pay attention to what's happening in these Asian markets. All right. Real quick before we do the Japan story, trading is done. We're at 4:05. Markets are closed. So I want to take one last trip through the indexes. The S&P ended up staying in negative territory for the day, down 11 points or about 0.25%, closing at 4,079. The Dow ended up closing firmly in positive territory, up 130 points or 0.39% at 33,826. And the NASDAQ, the red-headed step index of the day, down 68 points or 0.58%, still at 11,787. All things considered, could have been a lot worse for the NASDAQ today. So markets ended up having a decent day, not a terrible day. You know, the Dow did pretty well. The S&P pretty much flat. The NASDAQ down a little bit. So considering the fact that the market is waking up to the reality of a Fed that's going to be tighter for longer, I think things went all right for markets today. They took that quite well. All right, let's talk about the Japan story. BOJ, because this is another one you got to keep an eye on. This will probably have the more immediate effect, right? The whole story about China, that was really me speculating based on this mosaic of headlines that I came across today. Now, the Japan story, this is as close to a sure thing as you can get. All right, this will almost certainly happen. The BOJ will scale down ultra-loose policy this year, according to an analyst survey. This is in Nikkei Asia. They are saying economists mostly expect to change the yield curve control to complete exit. The Bank of Japan will curtail its ultra-loose monetary policy in some fashion by the end of the year as the central bank undergoes a changing of the guard, analysts predicted in a Nikkei survey. All 20 BOJ watchers polled said the bank will likely revise the yield curve control tool sometime this year. Answers were evenly split between whether the course correction will happen in the first half of the year or the second half. The Japanese government on Tuesday officially nominated Kazuo Ueda, apologize for the pronunciation, Mr. Ueda, to take, to take over as BOJ governor from incumbent Hirohiko Kuroda, whose current 5-year term ends in early April. So April is the pivot point, or at least that's when you need to watch. All right, Mr. Ueda takes over in early April. That's when the clock is ticking on this yield curve control policy. The yield curve control system is buckling, said Yuichi Kodama, chief economist at some institute. I can't pronounce any of this stuff. It's realistic to expect a correction under the new leadership. 8 analysts said the BOJ will move to abolish yield curve control for Japanese government bonds in one fell swoop. All right, let's hope that is not what happens, all right? And look, I'm a bear and I'm bearish, but let me just say, if that's what they do, if they do what these 8 analysts are saying, by the way, I wonder if they're related to analysts over at the China article. If all 8 of these guys are right and the BOJ just abandons yield curve control in one step, which is probably what I would do if I was a central banker, which is be glad I'm not a central banker, that will be a very sudden shock to a very delicate system, and that will make a flippin' mess out of debt markets globally. This will not be isolated to Japan if they do this. You're going to see money pour into Japan. You're going to see this big overreaction in bond yields. It's going to be messy. It's going to be messy. A minor adjustment only stalls for time, said somebody else I can't pronounce, at some other institute I can't pronounce. 7 analysts said the ceiling on the long-term Japanese government bond yields will be lifted beyond the current level of 0.5%. 5 analysts said the bank will redirect the yield curve control on 5 or 2-year bonds instead of the benchmark 10-year note. That's interesting. So still doing yield curve control, but in a different place on the curve. The BOJ will likely implement the changes this summer before economic conditions in the West deteriorate to give themselves some allowance to engage in easing again. Wait, what? Economic conditions in the West deteriorate? What happened to the strong jobs market, the economy that's strong as hell? I thought we were in the tree with the nest. No? What's this conditions deteriorating in the West? Okay. Well, I'm in the West. Someone should have told me. Majority of analysts said the BOJ will exit from yield curve control in the foreseeable future. 10 said such a move will happen this year, while 4 anticipate it will happen next year. One analyst predicted the withdrawal will occur in 2025 or later. So they're all saying pretty much the same thing. It's going to happen. It's just a matter of how fast and when. All right. That's one thing to keep in mind on. And this one, you can see this is already the talk of the town in Japan. Corporate Japan is bracing itself for change at the BOJ. The new governor, Kazuo Ueda, is set to review the central bank's ultra-loose policy. The surprise selection of Ueda to become the next governor of the Bank of Japan will break with decades of tradition and put an academic on that prickly throne for the first time in the post-war period. Now I'm going to have the Game of Thrones theme song going in my head as I read these articles. Despite the long-standing prominence combing through Ueda's previous comments for hints on what his appointment might mean for the cost of money is heavy going. Everyone is ravenous for guidance on what might happen should long-term interest rates creep higher. None more so than corporate Japan, which must not only confront the possibility of BOJ policy normalization for the first time in nearly a quarter century and several generations of senior management, but also recognize that normal was never all that normal. So how big might the coming readjustment storm be? There's some strong language here. Readjustment storm, deteriorating conditions in the West. This is going to make a mess, all right? And this will start as soon as April. So I want to get out in front of this one. I want you guys to be aware of this. This is something you need to know. This will make a mess in debt markets. It's going to disturb things, right? We've got this nice glassy pond with flat water. You can see your reflection, right? And then some idiot picks up a giant boulder and throws it in the water, and it just makes a mess and ripples and splashes and mud gets everywhere, right? What does the pond look like when that settles? I don't know. That's what's going to happen in Japan.
What I'd like to do actually is turn my VPN on and set it for Japan. And then the news will come up in English from Japan so that you can actually kind of watch what they're listening to over there and get rid of the American media bias. And you can do that with just about any country.
And this, folks, is why every channel needs a Mish. You got to have a Mish combing through the news and getting that data points. I tell you, man, every day I wake up around 8:30 right before the stream starts. I go through a couple of different stories and I look at the charts and everything. 8:30 the phone rings. It's Mish. All right, check your Twitter DMs. We got this story. Here's what happened here. We got this story. Here's what happened here. But sometimes it starts the night before. I'll tell you, man. Thank you for everything you do, Mish. You really do a lot for the channel. Appreciate it, brother.
Yep.
Yeah, getting the news, setting your VPN to Japan so you get Japanese news unfiltered through. I would never think of this stuff. I would never think of this. Every channel needs a Mish, man. All right, Japan to launch a pilot program for issuing a digital yen. Well, that's interesting. Right before they make a mess out of the global debt markets, they're going to go ahead and roll out their CBDC. Why not? Okay. But when are they going to do it, right? Surely there's no coincidence, right? And don't call me Shirley. BOJ to begin pilot program on CBDC from April. April. Right as the hawk takes over. Right as this guy's going to come in and walk away from yield curve control and create a crisis. Well, you could argue the crisis was created by decades of ultra-dovish policy, but the trigger of the crisis will be a returning to hawkish behavior. Oh, here, help yourself to some CBDC right as the crisis hits. Purely coincidental, right? Somebody called me a coincidence theorist on Twitter once. That is hilarious. I'm sure it's just a coincidence that they're going to roll out their CBDC right as the hawk takes over, and they know what's going to happen when the hawk takes over. And the business world, they're all puckered up. They're waiting for everything to happen. Yeah, have a CBDC while you're at it. Folks, I got to tell you, I've been saying it, resist central bank digital currencies with every fiber of your beings. Do not allow governments to seize that control from you, because that's what they will be doing with the CBDC. They're going to try to offer you a stimmy to adopt it. They're going to try to say, sign up for your Fed wallet and we'll give you $600 or we'll give you $1,000 because we care. Nope, that is your 30 pieces of silver. I'm telling you, do not give in to it. Do not accept it, because they will use it to seize absolute control of your autonomy. They will monitor, track, and control every aspect of your life with a CBDC. Any government that ever gets its hands on power like this abuses it, and people suffer every time throughout history. All right, Jack, get off your soapbox. Japan will start a pilot program in April to test the use of a digital yen. Yeah, to test it, because they haven't made up their mind already. Its central bank said on Friday, joining a growing number of countries seeking to catch up with frontrunner China and launching a central bank digital currency. I'm shocked that China is a frontrunner in human rights abuses. Where is it written that we need to catch up to them? Anyone? No. I got nothing. It's not written anywhere. I got nothing. China wants to do it. That doesn't mean you should do it. China does a lot of things. China beats up their protesters. They kick them in the back. They get my channel in all kinds of trouble for talking about it. Doesn't mean we should do it. The widely expected move follows 2 years of experiments that the Bank of Japan has been conducting to decide whether to issue a CBDC, and moves Japan closer to issuing a digital yen in several more years. Again, these central bankers, they have all already made up their minds. They're telling us this is a test case or a pilot program or an experiment, and that they're open to public comment. No, they made up their mind. They're going to do it, folks. They're going to do it. And the fact that they're doing it,
the program, they're not going to just cancel it. They're going to figure a way how to make it work.
Yep.
Or not work.
And I tell you, nobody is more adamant about a CBDC than Jabba the Hutt over at the International Monetary Fund, Augustin Carstens. You want to talk about someone? Would you give that guy control over when you're allowed to buy food or not? Okay. Again, you're allowed to, central bankers, you're allowed to make fun of central bankers. You're allowed to body shame central bankers. If they're engaged in a global conspiracy to oppress the masses, then they are fair game, and their offense is null and void. It's in the manual. Trust me, I looked it up. All right, guys, we have got 4:16. We've been going for a full-on hour. I think we're gonna wrap it up there. Let's get this weekend started, shall we? This is rainy, cold weekend. Oh, Mish, you got anything you want to add, brother?
Everyone stay safe out there. I think this LNG thing, keep an eye on that, and keep some dry powder. I think some here in the next couple of months, people are going to get some opportunities.
I agree with that very much. I'm a big fan of the dry powder. I am still sitting on mostly dry powder myself. I'm eating the cost of inflation, but you know what? Something tells me assets are going to go on sale very soon. Guys, I want to say thank you very much for your time, for watching. Please remember to like this video, because the China bots, the CCP guys, they are going to downvote this thing into oblivion. And I probably just landed myself a shadow ban on top of a shadow ban. Whatever. Do what you want. Twitter's still out there. Thank you, Twitter. By the way, follow me at JG_Nuke on Twitter, where the same content is over there. If YouTube wants to censor me, I will still be found over there. I want to say thank you guys for the super chats, for the support of the channel. Thank you very much to my Patreon supporters. You guys are awesome. Thank you to my Blue Wrenches and Mish for everything you guys do, both with the data gathering and the keeping things neat and tidy in the chat. Thank you to Mom and Dad for the PB&J. You guys are awesome. I love you guys. And until next time, live small and dream big.